To another interesting management joining us on the show, Kumar Infra. The stock is gaining 1.5% in trade. Nalin Gupta, MD of Kumar, is here with us. Nalin, afternoon. Thanks so much for your time. We understand that your company is on the verge of or have emerged as the lowest bidder for one of the prestigious projects in Tamil Nadu, the Chennai Port Expressway construction, a 5-kilometer stretch. Can you tell us more about it? And also, are you aiming at similar further projects around in the south? Because till now you've been a western player.
Well, so that's a correct information. Kumar, we have emerged as the L1 bidder for 3 packages, namely package 1, package 3 and package 2 and package 4. So it's approximately 5 kilometer each, which is a double-decker elevated corridor from Chennai Port to Madhuraya. And we are expecting the LOI very soon on that.
And what will it do to your total order book then, Nalin? What will it scale up to? When will the execution start? And what will be the timeline of revenue accretion?
Well, so I would say the initial, we should be seeing the revenue realization coming in from Q3 onwards. And it's a 100% share is from Kumar, wherein in 2 projects we are having a joint venture with 90% participation, and means we should expect that the LOI should come in this week itself.
Nalin, up till now you've been a western player, right? You've done some phenomenal work as far as the complicated Mumbai infrastructure is concerned. Are you spreading wings now as far as the company is concerned more towards South India as well, eventually trying to look towards being a pan-India player?
So I would say that Kumar, we are already a pan-India player with having our presence in 5 states, namely Maharashtra, Gujarat, Rajasthan, Delhi and UP. So Chennai is another state that we have selected in terms of the size of the projects that has been coming up. So we were always focusing into having multiple projects or bigger ticket size is what was our focus. And that's how we have already backed 3 projects and 1 more project is underway, which is the package number 3, which is going to be opened in a week or 10 days time. And we are quite hopeful for it. And we means having the economy of scale of executing this entire 4 projects together. I think that would be a sizable project to make some good margins for Kumar. And we have also bid for Chennai Metro package UG0 for the underground metro project for the phase 2. So now again, Chennai will be surely our next state for focus and growing our business in that area.
Sure. So Tamil Nadu is another focus area. And you talked about how, a couple of these projects can help you improve your margins as well. So talk to us about that. Your margin profile has been around 14 to 15% in the year gone by. What could it be in the coming year, given the fact that commodity prices are also softened, and are new orders coming at a better margin profile?
Yeah, I would say that Kumar, as a principle, we follow that we don't want to back projects less than the 14-15% EBITDA margins. And even this project that we have bagged, we are hopeful to make the similar number due to the economy of scale, bagging all 3 projects in the same vicinity of the same corridor. So we are very hopeful to make the similar margins. And with this, our order book going up to like 15,000 crores. With we were at 11,800 crore as of 31st of March 23. And this is a total order book increase of around 3,100 crore, wherein we are L1 and we should be taking the order book to 15,000. And so we are very hopeful that the margin will remain the same, and which will help us grow at an CAGR of around 15 to 16% on a year-on-year basis for the revenue.
Your current order book is one thing, but what is the visibility for rest of the year in terms of orders? Also, because that led to a close to 30% rise in your PBT and your profitability the last year. So what is the kind of velocity are you getting for new orders, and how will it aid your profitability?
Well, so there are projects worth around 11,000 crore, keeping aside this 3,100 crore where we are already L1, is which we have already bidded, and the result should be out in this month or the coming month. So within 1 or 2 months from now, the 11,000 crores projects worth which we have already bidded, which includes the high-speed railway for the C3 package, as well as the Chennai Metro, Nagpur Metro, one more package of Chennai of the same corridor, which is yet to be opened. So with this 11,000 crore, we are hopeful that we should back some sizable order from this as well. And there are projects worth nearly around 40,000 crore, which are expected to be bidded in the next 6 to 8 months' time. So we are very hopeful that this year we shall be closing with a good number of order book, and we hope for the best.
We hope for the best, but you did a revenue profile of 4,200 crores in the year gone by. What it could be in FY24? Could you hit the mark of, let's say, 5,000 crore this year? And what kind of profitability will come along with that?
Yeah, so this year, as you are aware, we grew at a rate of around 19%. But to be on the, as Jkumar, we always talk about conservative numbers. So Jkumar, we are expecting to make a top line of close to 15 to 16% increase in this year-on-year CAGR growth that we are expecting. And the margins will be surely around 14 to 15% EBITDA margin. As we have already, the revenue will be coming from the orders backed by Jkumar, which has been secured at the similar margin of 14-15%.
Nalin, Manisha touched upon it, but I just want to understand, how is the raw material scenario looking right now? When we talk to many other players, we understand that at least for metals, the prices have come down very sharply. How are things on wages? Because that's a very big part of your overall business. How are things on cement in different states? Have things materially improved on these fronts as well?
I wouldn't say that steel and cement prices have been going down, or I would say rather it's more or less stagnant. And I would say that the increase or decrease, it's like both ways. When the prices were increasing, still the impact wasn't any remarkable impact on the margins, which can be seen from the numbers of the top line and bottom line made by us. As all the tenders are pass-through tenders, wherein this is a very, I would say, in very hedged sort of arrangement that all these contracts of EPC has, wherein if the price increases, you have been paid compensated for the increase in the raw material prices. Similarly, if it goes down, it will be on the negative side. So the escalation would be coming out as negative. So I don't think that anywhere the matter is of any concern with regards to margin for the infra companies who are into the EPC sector. And with regards to the prices, I don't see any major decrease in prices, because as per the steel industry, as well as the cement industry, they were making losses. So I find that with the growing demand in the infrastructure segment, I don't really see any reason why the cement and steel prices should substantially come down, I would say.
Okay, Nalin, on that note, we'll let you go. Appreciate you joining us on the show. So, maintaining a margin of around 40